You need to keep your eyes on is every aspect of a financial business is now going to be digitalized. And if you're willing to embrace that thought, you can do more with less, quicker than ever before. And so whatever your business is, real estate development, real estate investment, property management, I don't mind what your business is, commercial, industrial, it's all going to be quicker, cheaper, and easier. And I think there's really smart people in the room are going to use that to build larger, more profitable businesses. And then a lot of people will be on the sidelines sort of wondering, when should I move and how can I move? And they'll fall behind. And we've seen that before.
Welcome back to the Massive Passive Cash Flow Podcast. I'm Gary Wilson, your host. I'm so glad to have you back listening to the show or watching if you're doing that in recorded mode, because you can watch the video as well as listen to the audio. We've got an excellent guest today, Matthew Le Merle, We're going to talk to you about the digital finance world, and some interesting information will come out as a result of this. And look for also the show notes once this is published, and you can get more information there. So first off, Matthew, I just want to give you a warm welcome to the show. I'm so glad to have you on. I've really been looking forward to this since we got introduced. So thank you very much.
Thank you for having me, and I hope this will be interesting for your audience.
Absolutely, I'm sure it will. So if we could start at the beginning, it's I know it's kind of seems like a cliche type question, but this whole world is so new to us. And I come from a banking background. I retired in 2003 from the corporate world. But when this whole thing started, late 2009, nobody paid attention to it. And then all of a sudden, we're hearing more about the blockchain, more about crypto, really the digital world, the digital dollar, things like that. I think there's just a lot of education that needs to occur in the world. And so why don't we start with what got you into it? Was it a tipping point, something somebody mentioned to you, or just that you were in finance already? If you mind sharing that to start, that'd be great.
Happy to, Gary. And I think this is going to demonstrate that we both have gray hair, or at least you do. I have little hair. In my case, it's almost 45 years since I started working in the area of digitalization. First as a consultant, working with big companies, the world's biggest banks, the Bank Americas, Chases, the Visas, the MasterCards, on what I like to think now, digitalization version 1, which was how do we use the internet to make our offerings more accessible, more available online. And, I was working back in those days as a consultant, as I said, and I helped the Bank America team launch bankAmerica.com. Later, I worked on things like Gap.com, both as an advisor and then as a corporate executive. And in the 90s, that was, the first time that I really understood the power of digitalization to make products and services more accessible, less expensive, faster, and easier to use for everyone, whether that be individuals or small businesses, large enterprises, governments. The power of technology to simplify and make things more accessible was really profound for me. And I continued to work on that through the 90s and into the zeros. And I think in that first phase, Gary, we were really digitalizing communications and content. And today we take that for granted. We all rely upon it. You and I right now are doing a real-time communication online through a platform. And we couldn't have done that in the past. And there's no person listening to this who doesn't know that intuitively something changed dramatically. Their businesses will never go back, and digitalized communications and content is sort of just the way of life. The issue, Gary, is we didn't digitalize value, and we haven't yet digitalized decision-making and intelligence and work. And we're now working on that next phase. And before I get to blockchain and crypto, for me, that was a really big thought that we could do for money and investments, assets, and even more we could do for work what we just
Hmm.
did for communications and content. And I set out on that journey 25 years ago as an investor, investing in internet, fintech, and digital content companies. But
Hmm.
about 12 or 13 years ago, Alison and I, Alison being my partner and wife, former CFO of Barclays Global Investors, which is now
Yep.
BlackRock, the firm that she and I worked together on helping launch iShares, today the world's largest financial product. Um,
Hmm.
we set out 25 years ago on this new journey. 15 years ago, we saw blockchain for the first time, and a light bulb went off or turned on. And the light bulb, was that we saw for the first time a digital money that could go over the internet and anyone
Hmm.
could use. And I think Alison was the one that really understood that what she was seeing was much more profound than Bitcoin. She was on the board of Fiserv, had served on the board of First Data, and she
Hmm.
understood that this was a digital money, but it was also software. And that meant we could have as many digital monies as the world wanted, which in
Hmm.
turn meant that we could digitalize all the world's assets, all the monies, commodities, and securities on the same rails, on the same technology. And so we began to invest very heavily. We stood up fund of funds. So we manage fund of funds for early stage exposure in the space. And then we became a direct investor. And today we're an investor in most of the unicorns of digital finance.
Hmm.
And then, and this is now I'll stop, but this software revolution also embraces internet. It's the digitalization of value with blockchain and tokenization, but it also brings us to AI and agents digitalizing intelligence and work. And all of those things are converging. And I'm sure we'll talk more about that.
Okay. Uh, well, what I'd like to do is let me go to some 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 basic topics here. Let's talk about the what. So, if right now, probably one of the biggest subjects out there in the world is policies. What global policies are shaping the trajectory of digital assets, and really, what does that mean to the investors? What do the investors need to know about that with the policies and policy changes coming down the road?
Yeah. So Gary, for the last regulation, legislation, and compliance and policy matter a lot, particularly where value is concerned. And obviously, everything I just said is it's even more important because whereas communications and content, we do care about things like who owns the copyright, is it pirated, who should be allowed to look at it, etc. When it comes to money, we can't afford to have money copied or pirated or fake money entering the system, etc. So all of those matters really matter. We began tracking regulatory support for digital finance probably about 6 or 7 years ago, and at the time, it was quite confusing. And I think a lot of countries around the world didn't know whether to embrace this or run away from it.
Mhm.
Today, almost every country in the world would agree that digital finance is now going to happen. And we're upgrading all of the world's financial infrastructure as a result. And I think AI and agents are only accelerating that understanding. You can't have two agents transacting with themselves if they have to stop the conversation, go offline, visit the bank account, do a fax or two, do some wet signatures. Of course, that doesn't work because agents
Mhm.
are computing and software and they can't interact in that way. So digital finance is clearly the future. Every country around the world understands that. And most countries have passed legislation. The most important in that conversation is the US, because
Mhm.
under the Biden administration, the US was frankly hostile to the things we're talking about. And they were, more broadly, it appeared, hostile to innovation in many different guises and forms. And today, that is just isn't true.
Mhm.
Almost at the very first, one of the first executive orders signed by the new administration was one about the US taking leadership in digital finance, which of course the US should be a global leader. in that space. So
Mhm.
we do not yet have all of the legislation completed, and that won't be completed for many years. The global harmonization of internet rules and regulations hasn't yet occurred, and we're 40 years into
Mhm.
that. So the EU and the US don't necessarily see eye to eye on things like the right to be forgotten online, but or sales tax and where it should be collected and which jurisdiction should be the benefit of Google or Facebook online revenue and taxation. So harmonization on a global scale is a very long conversation. But here in
Okay.
the US, we passed the Genius Act that allows for stable coins. We can talk more about what those are. We're in the process of defining what's called the Clarity Act to help
Mhm.
with securities,
Mhm.
tokenized and digitalized securities, which is very relevant for real estate. And then
Mhm.
there are other important pieces of legislation that have already been passed. There's also much more, to use the word again, clarity over what the CFTC will be responsible for, what the SEC will be responsible for, what the federal government should take the lead on, what states should be, expected to take leadership for, and so on. So we're getting there. It's not finished, but in
Mhm.
terms of, most people listening to this, you can feel confident now that digital finance is coming in all of its guises, and
Mhm.
the US will be pro, I think, in every way, regardless of which administration is in control after
Yeah.
2028.
Want to learn what's working right now in real estate? Then don't miss Monday Night Live, happening every Monday at 7 p.m. Eastern. Each week, we bring you expert training on real estate investing, agent attraction, lead generation, marketing, and AI powered strategies to help you work smarter and scale faster. You'll also hear inspiring success stories and lessons learned from some of the most successful real estate leaders and investors in the industry. Whether you're a brand new agent, a seasoned investor, or building a high performing team, there's something valuable for you every single week. Learn, network, grow. Registration is completely free. Simply visit globalinvestoragent.com to reserve your seat for an upcoming Monday Night Live session. Join us this Monday at 7 p.m. Eastern Standard Time and discover strategies you can put to work right away. We can't wait to see you there.
Good. Yeah, I've been feeling that way myself, probably since, I'd say the early 2020s. First, there were some bumps in the road, and of course, another change in administration. But the reality is, uh, I still stay in contact with some of our friends in the banking world, and a lot of businesses have turned to blockchain processing for various reasons. But how? So when we look at blockchain, how, how is how is blockchain reshaping banking and payments and asset management and so forth? Because this is really what I think the investors want to hear. Is it's probably will calm them, but also educate them and let them know that, like you just said, that this isn't going anywhere. It's here. There's, I mean, all over the world. There's not anywhere in the world where people aren't in this space to some degree.
Yes. So I think one of the things that gets in the way of people's understanding is they try and go to technology instead of understanding sort of really what's changing from a business perspective. So, rather than what is blockchain doing for finance, I think it's better to talk about how does digitalization help people run their businesses better. And that's
Mhm.
where I would begin. Blockchain is a enabling technology, as is tokenization, that leverages blockchain, and they help the internet be more fit for purpose for financial purposes, for moving value in secure, trusted, and high quality ways. But
Mhm.
if you don't mind me reframing the question,
Okay.
there's no real estate guy that doesn't, or woman that doesn't know that the internet changed their businesses profoundly. And, they remember when every tenant had to pay you a check or
Mhm.
cash, and you had to go and pick it up. And
Mhm.
then you had to go to a Dropbox and drop it off. And, eventually it would get credited to your account. And if you dropped it off on a Friday, you wouldn't get any benefit till Monday or Tuesday. And meanwhile, if you got mugged on the way to the bank, you'd lose the rental payments for that month, and you even see it in films. I mean, funnily enough, I was watching a Julia Roberts film on a plane, and it was just funny because she couldn't pay the rent, and the guy was banging on her door asking for the rent. Well, in most modern large scale real estate firms that focus on property management and face off against retail in particular, by now, it's all gone online. People pay you on a monthly basis directly out of their accounts. The money gets transferred to you, and that's version one technology. There are still problems. It doesn't happen on a weekend,
Yeah.
and you don't get credited as quickly as you should be. And the bank makes it sort of hard for you to move the money into places where you can earn a high yield on it. So if you leave it in cash in your bank account, you earn nothing. If you sweep it into a money market, you earn a little bit, but not much. And meanwhile, they make a lot of money holding onto your money. They lend it out in a fractional reserve model, and they make a lot more than you make on your cash. And it's just an example. By the time you try and sell an apartment, you could be into 45 days or 60 days of paperwork.
Easy.
Yeah, a huge mound of paperwork. All these things you've got to print out and sign and notarize and return. And if that wasn't bad enough, there are all these costs like title insurance. I mean, what's that even about? Right? In a world when the title's digitalized and the government should have they don't have, but they should have all of the rights and the title, adjustments and everything should be digitalized, then why do you need title insurance anyhow, if you see what I'm saying? So those 45 days should be a matter of minutes, days at the most. And the costs associated with that should be dramatically reduced. And just again, to give you, if your audience understands real estate, they're going to really understand what I'm about to say. The average American apartment or house is the biggest asset most Americans have or will ever have. The average property sale in America is like $250,000. So Americans are not on average that wealthy. And the average cost of buying or selling a $250,000 home in America is approaching $20,000. So every time an American wants to, buy or sell the biggest asset they own, they lose 10% of the value roughly in cost. And it takes them, as I say, at least 60 days and maybe longer just in the paperwork and the closing process. And all of that is going to be digitalized. So the reason I'm answering this question, Gary, is because you don't need to know that under the hood, it's blockchain. And just in the same way as almost none of your listeners can explain how the internet works, and they don't know about TCP, IP, and frame relay and compression and other things. They use it, but they don't understand the details. So's the same here. What you need to keep your eyes on is every aspect of a financial business is now going to be digitalized. And if you're willing to embrace that thought, you can do more with less, quicker than ever before. And so whatever your business is, real estate development, real estate investment, property management, I don't mind what your business is, commercial, industrial, it's all going to be quicker, cheaper, and easier. And I think there's really smart people in the room are going to use that to build larger, more profitable businesses. And then a lot of people will be on the sidelines sort of wondering, when should I move and how can I move? And they'll fall behind. And we've seen that before.
Yeah, that helps a lot. Well, so let's continue along that same line there with the blockchain. So can you get into the private and the public capital in the tokenized world, and why is the blockchain, why is it a fundamental shift, and how the capital markets operate. I know if we could spend on that a little bit more, that would be great.
Okay, I'll try and be a bit quicker, but in order to answer that question, I have to again go back one step.
Yep.
Every asset in the world has an owner,
Mhm.
but the problem is the property title, the asset title is often paper based, and even if it's not
Mhm.
paper based, it sits in version one technology. So, in some cases, the proof of ownership of, say, a public equity, which is the share certificate, was digitalized a while ago, but it's version one technology. It doesn't work on weekends. By the time you get to a house, the title is sort of digitalized, but we know it takes a long time to trade it. By the time
Mhm.
you get to a car, it sits on maybe at the DMV, but they still make us have a pink slip, and you have to sign the pink slip in America to change ownership for the vehicle. And then most of the world's assets, it goes on down from there. So public equities, venture capital, most funds, you're going to have to deal with lawyers and a lot of paper to shuffle around ownership to make a commitment, let alone to sell a commitment or an
Mhm.
investment. So the important thing to keep your eyes on is that the asset is owned by someone, and there is some way to prove ownership, but it's typically
Mhm.
paper or people based or rather clunky. Keep
Mhm.
that in mind. Second point, when
Mhm.
Satoshi Nakamoto wanted to move money over the internet, peer to peer cash, the problem
Mhm.
was that the internet isn't fit for purpose for doing that. It's not sufficiently secure. There are no digital forms of identity. There was what's called the double spend problem, which I won't go into now. And so
Mhm.
it wasn't possible to move value over the internet. You could send an email, but you couldn't move a
Mhm.
dollar over the internet. A lot of people
Mhm.
think you can, but you can't. You go out a payment gateway and you're going to work with Visa, MasterCard, or the banking system. You can't actually put the value into the email and send it, right?
Mhm.
So blockchain was invented as a technology to complement the internet so we could move value over the internet.
Okay.
I'm not going to explain today the technology of how that works. Just trust me that it does. And
Mhm.
the tokenization is the innovation that enables that. And so now when we tokenize a asset ownership record, we
Mhm.
essentially digitalize the ownership. So just like we digitalized public equities by digitalizing the share certificate, so we can actually digitalize the title to a piece of real estate.
Mhm.
And when we do that, a bunch of really interesting things happen. The first is theoretically, I could move the ownership certificate record over the internet to anyone in the world,
Mhm.
almost in real time at almost no cost. Now, we'd still have to settle it, but just bear with me for a minute. The second
Okay.
thing is quicker, cheaper communication of ownership definitely becomes possible. We also get to potentially fractionalize ownership in ways we couldn't historically, which is very relevant for real estate.
Oh, yeah.
Thirdly, we get to build all sorts of potential derivative products and to increase liquidity. It doesn't happen automatically, but it has happened in the past. So when we digitalized public equities with the big bang, what we did see was the creation of derivative markets and massive liquidity as a result, and high speed trading and other things surfaced. So the expectation is as we tokenize other asset classes, including real estate, it will open up the option for derivative products, higher speed, higher volume trading, greater liquidity, etc. But they're not guaranteed. People still have to want to own the asset for any of those things to kick in.
Mhm.
So that's the journey we're on, and that's how blockchain is helping. Blockchain is an enabling technology that allows
Mhm.
us to digitalize proof of ownership and treat it over the internet just as quickly and easily as we treat a digital communication like an email or message or sharing content like we're doing right now. I mean, we can do this right now, but if I want to send you some value, Gary, let alone if I want to give you something physical, like I want to say you can have ownership of my desk.
Yeah.
How long that would actually take. I didn't even keep the invoice for the desk, so I can't prove I own it. So how am I going to, if I sell it to you, we're going to have to come up with some proof of ownership for the desk, even though I know physically getting the desk to your home is a physical process. Giving you ownership for this desk should be cheap, quick, and easy. It's not. Today, it is slow, expensive, and hard.
Yeah. There's I'm so glad you brought that up too, because there are already businesses out there where consumers can go online and through a website access the ability to purchase fractional ownership of real estate, and it's all done via the blockchain. So it's not like a timeshare where you own a week and I own a week. It's actually a percentage of the value of the property. Like you said, we're actually investing in the value, not necessarily the physical brick and mortar, but the value of the brick and mortar. And to me, it really opens up a lot of possibilities for people, because historically you would invest in a REIT, real estate investment trust. But what you're doing is you're buying shares of a trust, the real estate investment trust, and the real estate investment trust owns the assets, the physical assets. Well, with fractional ownership, it's direct, it's more direct. You don't have the middle person there. You're owning a fractional portion of the asset that you can trade. You can buy it today and sell it tomorrow, which is way faster than, yeah.
It's true, Gary. Everything you're saying is true, but it doesn't mean that it makes it a good purchase or a good investment. So,
Exactly.
I mean, it's not that complicated, right? I think if I went to you or any person that's listening to this and said, "Do you want to buy a share in my company?" Right? You know what question you'd ask. It wouldn't be, "Tell me about the share and the price." You'd say, "What's the company?" You'd say, "What's the asset? What's the company? What does it do? Is it, do I make money? Do I lose money? Is it growing? Is it shrinking? Is it, what business is it in? Is it is it highly competitive market, et cetera, et cetera? Is it legal? Am I doing something with this company I shouldn't be doing, et cetera, et cetera?" You do due diligence. And the most important question you'd ask would be, what is the nature of the asset? And then secondly, you'd want to know, as I said, all these other questions, including what's the price and what are the prospects. So the same thing is, if someone comes to you and says, "Do you want to buy my token?" Don't say yes. Say, "I'd like to do some due diligence." And probably 90%, 99% of the time, you shouldn't invest because it's not a good investment. The token doesn't have good value behind it. It's not a real business. It's not real software being built or whatever. So I always say to someone, I have this, Gary, I went to my business school reunion and I was at Stanford Business School, and they all know that I'm in blockchain and AI and tech investing, and some of them have lost a lot of money in crypto. And so they'd say, "Oh, you're the crypto guy." And I'd say, "Oh," and they'd say, "Yeah, I lost a lot of money in crypto. That's a bad space, isn't it?" And I got a bit fed up with it. So eventually, this guy, one of my classmates, was saying the same thing as others had said. And I said, "Well, what did you invest in?" And he said, "Well, it was this token, the Gary Wilson token." And I said, "What does the Gary Wilson token do?" And the guy couldn't answer the question. And I said, "Did you do any due diligence into the Gary Wilson token? What's the software? What's the protocol? What are they building? Is it usable?" And he said, No, I just bought some Gary Wilson token and it went to zero." And I said, "Well, of course, you deserve to lose your money because you forgot the principles of investing. And the first principle of investing is do your due diligence, caveat emptor. If you're going to give money to people sight unseen, you're going to lose money. And furthermore, and you know this very well, Gary, given what you do, money is a magnet to bad actors and bad practices. As soon as you have money, all the bad people come after you. They want your money. And it's true in crypto, but it's true everywhere. the only defense an investor has is due diligence. And if you don't do the due diligence, you deserve to lose your money. And crypto 100% has been, that type of a space. So I've gone on a little long on that, but it's only, Gary, because, I would much sooner the audience went away and never invested in any technology or innovation if they're not willing to put in the time and energy. And it's true if you're running your own business, you would never deploy a new technology into your business without doing due diligence to make sure it works.
Absolutely.
And this is number one, most important takeaway of this webinar.
It's a fundamental rule of investing, no matter what the asset class is. And just like the example I gave of the fractional ownership of real estate, you don't just give your money, you have to research the property that you're going to have fractional ownership of. And nowadays with technology, like on my team, we have a team of real estate agents who run across the country. It's a national team, and we focus on data first. So we research the property. We know who has title to it. We can even see what the rents are. We can see all of this before you either purchase it outright or purchase a fraction of ownership of it. But speaking of investing, if I could, this is the perfect discussion for this next question. Is like if you were speaking with a wealth advisor or a family office, what could you tell them about accessing blockchain investments for the long term? I'm not suggesting you suggest specific investments themselves, but the fundamentals, again, like what we just talked about. And they've got a lot more at stake than the average investor. I mean, they're dealing with sometimes large family trusts and things like that,
Yes. So let's be clear. I'm a SEC registered RIA, and I'm very constrained around a question like that. So far, we've not been doing anything that could be construed as investment advice. And obviously, on any webinar, I'm not allowed to give any investment advice. But what I can say is the following: don't think about it that way. So, what you need to start off with is a point of view on what you think the future is going to look like, and where do you think value is going to be created. And I don't really care what type of investor you are, what asset classes you prefer. You always should be asking that question, where is value going to be created in my industry, and what is the future going to look like? And I think, and I hope everyone understands that there's no industry in which the future is not going to be more digitally enabled, 5 and 10 years out than it is today. And I think there are whole industries that are going to be turned upside down, and where the AI and the agents and the digitalization of those industries is going to be where the value is going to be captured or unlocked and captured. Now, we can debate that industry by industry, but just for the purposes of today, if you were with me and if you were agreeing that the future is going to be more digital than the past, I think you only have to look at the internet in the last 30 years to know that almost all the alpha of the public markets has been driven by a handful of companies that were internet first companies. And so their names, the FANGs, so to speak. Well, I think that that's going to be true again. So it won't necessarily be the same companies, but I think most of the alpha of the next 10, 15 years will be captured by the companies that are really taking advantage of certain topics, digitalization being at the core. It's autonomous digital economy. It's the use of AI and agents. It's the empowering of all of that with digital infrastructure, which is built on the internet and blockchain, and the use of all of that. Most industries are going to be transformed. So if you have that sort of a point of view, then where you invest is a function of what's going on today, what's going to go in the future, how much value is going to be unlocked and where, and which are going to be the leading players and companies that therefore I should back. And those are the questions we ask every day. So if a wealthy person, a principal, a wealth creator asks me, where should I invest? That's what I would tell them. And then it doesn't matter if you built businesses that were in real estate or technology or in industrial manufacturing, it's the same thing. It's the same questions. How will the future of manufacturing be transformed by robotics, autonomy, and so on, and AI? What's the future of real estate? Gary, did a lot of work on social marketing and Web 2 and in real estate. Well, what does Web 3 and Web 4 in real estate marketing look like? And how do you build your real estate business even faster by having agents do all the marketing and the outreach and the conversion and the upsells and the so on? So my answer to your question is don't pick something without doing the hard work. The hard work is, what's my perspective on the future? How do things work today? Where is the value being unlocked between today and the future? Which companies or products or services or spaces do I think will capture most of the value? And that's where I should invest. And if someone does all of that work and they say, well, I'm going to put all my money in Philadelphia cream cheese, I think they missed the whole point, and yet that's what most people do. If you actually look through most people's public equity investing, they have a heavy weighting to old companies creating old products and services, and they have relatively modest weighting, even with the Amazons and the Nvidias and the Googles, they still have a relatively modest weighting towards innovation in the future.
Yeah.
By the time you come to real estate, it is a bit different because, location, and the physical really matters. At the end of the day, real estate is about the real world. But I think value-added strategies in real estate are going to be heavily technology. I guess you're calling it real estate, infra tech and real estate tech. And smart real estate guys are grabbing hold of the data center boom and the AI and the blockchain mining booms, or smart city infrastructure, or even simple things like, how do we monitor all of our buildings for energy efficiency using new technology? I mean, there's just so many ways we could unlock value in real estate with technology, and that's where I would be investing. Even if I were going all the way back to the beginning, I was saying, well, I don't want to invest anything else other than real estate. I would still challenge you to come up with a reason why you shouldn't do technology-enabled real estate investing rather than non-technology, empowered real estate investing. I feel like this is well proven at this point.
It is, and it just kind of takes us back to the beginning. And thankfully, you kind of alluded to this. I'm just going to rephrase it. It reminds me of the gold rush in like the 1849, when there were people who were mining for the gold, and there were the people who were supplying the shovels and the tools and the technology to the miners who were mining for gold. And guess who made the most money more consistently? It was the people that provided the technology. And in real estate, just in the last, 10 years, my gosh, if you look at 3D printing, I've seen homes literally being built with 3D printers on site. And the technology that controls manufactured homes today are vastly superior than what they were even 10 years ago, because of the tolerances for errors and things like that are so small now, because the computers driving the technology driving the manufacturing is vastly more improved. The materials are more improved. Now we can construct homes in less than a day. So if you really look at it, it's changing right in front of us. In fact, in 2017, Peter Diamandis wrote in his book, "The Future Is Now." He mentioned the industries that were changing. He got into finance, and real estate was part of that. He actually mentioned eXp Realty. Everybody keep an eye on this company. They're going to lead the pack. And since 2020, the top 5 real estate companies that have been launched have all followed the eXp model. They're trying to copy the eXp model. And it's technology driven, technology based. And I'm not saying the old franchise model is not going to be around, but let's face it, they'll be here. They're going to have their place in history, just like the horse and the buggy, just like the propeller driven plane. They're still out there. But the fact is that the industry is changing and evolving, and technology is a huge part of it, including blockchain.
Yeah.
Any final
So
words of wisdom? Oh, yeah.
yeah, the only thing I want to say I was listening and I sort of understand everything you said, Gary. I at the same time, there's a lot of ways in the world to make money and to have a good life. And I don't want anyone to come away from this feeling that we don't respect that point. I mean, I think there's two big questions in my mind, two or three. One is, I do believe more of the value will be captured in the way you described, Gary. The innovators and the people that back them will capture more of the value. But that's okay. I mean, you probably could still make a great life doing real estate development and investing in the old-fashioned way, at least for a decade or two more. And you don't need to embrace all of that innovation and technology. On the other hand, if that's the choice you make, don't come and complain in a few years' time that you missed out on the bigger piece of the puzzle. And I do see that happen a lot. It's sort of like people who moan a lot about the fact they're not Elon Musk, but they didn't want to be Elon Musk and they chose not to be. And if that's the choice you are choosing to make in your life, that's fine. I wouldn't want to be Elon Musk myself, but I can't sit here bemoaning the fact that he's a trillionaire and I'm not. Right. So coming all the way back to real estate, if you want to be an industry leader in real estate, I think you have to embrace all the things we've been talking about. You embraced CAD CAM and digitalized blueprints. Well, you should be on top of digitizing titles and speeding up the closing process. And you should be embracing, agents going out and finding tenants for you and doing the deal online without the need for human intervention, et cetera, et cetera. But you don't have to. But if you choose not to, don't come and complain to Gary in 10 years' time that you missed out on this enormous wealth opportunity.
Exactly. Because I'll probably be on a shuttle tomorrow, one of the Musk shuttle. No, just kidding.
To space.
Here you go. I'll tell you what, this has been one of my favorite podcast interviews. I know we went a little bit long, but I'm pretty sure the listeners are going to agree. We could keep going. In fact, that maybe I can have you on again, and we can touch on other related subjects. But I just want to thank you for doing this, Matthew. We really do appreciate it.
Happy to, Gary. If your audience gives you positive feedback, I'm happy to come back another time. On the other hand, if we didn't quite hit the, if the audience doesn't get the value, then why bother making them sit through it a second time?
Well, I think it's partly me because I have a degree in computer science. So granted, it's from, my gosh, 1985. So that's when we wrote code with blocks of granite and chisels and hammers. That's how we wrote code. But I think I attract a lot of technology people. We do attract a lot of engineers, for example. But for everybody listening, if you could actually please take that as the lead for you to leave a review for Matthew and I for this podcast, because it's a subject we probably talk about once a year, and each year it gets better and better because we're learning more and more. And I hope you are too, you the listener. So thank you for listening. Thank you if you're watching the recording and the video recording in recorded mode. Thank you again, Matthew. And we will see you all, God bless you, by the way, and your families. We will see you all in the next Massive Passive Cash Flow podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.